All right, welcome back for the episode of Carnivore Trade. Today is Monday, January 30th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, basically all settled in here. Obviously, there was no video on Friday. Still not quite at my permanent residence yet, but I will say it was snowing when I left, and I'm wearing Hawaiian shirts now, so I'm in a good mood here in the Tampa, St. Pete area. As many of you guys have asked, but that is where I am. And don't have quite my full trading. I do have my full trading setup here, but I do have a little bit of a different screen main screen that I'm working with. So just bear with me if I have some hiccups here. But and it will probably be like that for the next couple of days, if not the next week. But for all intents and purposes, we're all back to normal here. But anyways, let's get into the markets here. So Spider's down 1.14% currently. Q's down a little bit more, so under pressure here. Apple dragging the market down a little bit. Microsoft and Google are nicely lower, both down over 2% as well. That is pulling big tech down. NVIDIA down 5%, as is Tesla there, down over 5, almost 5.5 there on the day. So that is dragging the triple Qs down. But let's take a look on the hourly here. And we're watching this rising wedge pattern. I'm going to break this down here in the hourly. 1, 2, 3, 4, 5, 6, 7 hourly candles down in a row. But no technical damage yet, right? We're still above that 50-hour moving average. So, I mean, this is really just a pullback at this point. However, we're still watching this rising wedge here. And I think you can even see it a little bit better on the futures. So there it is right there. And you can see it there on the daily as well. But we're into some pretty good support here. And my guess is, you guys know I've been kind of in the camp that we're probably going to pump into FOMC, and it's going to be a pump and dump. Sell the, buy the rumor, sell the news. Classic move here. Again, we called for the rally in late December. We said January we'd be up, and then towards the end of January we'd start to top out. And that looks like that is happening. Market is just rallying up on. If you ask me, it's hot air. The market's acting like the Fed's going to pivot here. I mean, we know they're going to do a 25 basis point hike, and I think Powell's probably going to come out pretty mean-spirited. I honestly don't really care here. All I care about, though, is the probabilities, and that is that when you rally like you have, it just makes it that much harder to hold the gains, as I've already kind of alluded to in the previous week here. Take a look at some of these stocks like Carvana here, up over 100% year to date. This is not the type of stuff you see at the beginning of a bull market. Bed Bath & Beyond. I mean, even with the pullback here, they had that big squeeze last week. There's many others here. Shopify had a huge run. Guys, Tesla's up 80%. It's 80 since the 6th. So in like 3.5 weeks, that's 80%. That's not beginning of bull market stuff, guys. So we're looking for kind of a sell the news here. Massive short squeeze, and a lot of people getting bullish now, including everyone's favorite Jim Cramer. So yeah, you guys know what I'm looking for here. Overall, though, for right now, as far as going into tomorrow, I think the market's a little bit short-term oversold. We should get a bounce. In fact, we are getting a little bit of a bounce right here. And then you can see we went right into that trend line there. On the hourly, again, that 50-hour moving average. If we look at the 4-hour, nothing really there. Basically just going into that tail candle. But again, you see the trend line there. And I do think we get one more bid here. And then I think it'll be basically lights out for the market. But for right now, we're hanging in there okay. And as of right now, this is nothing more than just a pullback here. If we do break this lower trend line, that does kind of change things here. But my kind of bias here right now is that we do get one more push up. It'd be a little surprising to me if the market just started to sell off ahead of the FOMC. I think for me, you'd want, if I was an institution or market maker, I'd want the market to be up as much as possible and get as many longs sucked in as possible before dropping it. But I mean, and again, there's nothing to say that can't be front run here. If it does, you'll have some good support around 395. Again, that's that previous all-time high trend line, 220, 50 moving average, all in that area right there. So those would be your levels there on the downside. At least in the short term. Triple Qs here, again, same kind of thing. We closed above that 200 moving average. In fact, technically confirmed above it with that secondary outside candle up, pierced the double top, and then pretty good gap down. The Qs may have topped. Doesn't mean we can't have a pump tomorrow and maybe even on the FOMC statement, but this may have actually topped here. And that is, that's a pretty good outside candle and a pretty good rejection there today, although it is on pretty light volume. So 40 million shares here at 3:38 p.m. and on the spiders here, 49 million shares at 3:38 p.m. So very light volume. But again, market's very overextended here. Look at the Qs. 260 to almost 300 in, again, like basically 4 weeks. So pretty nice rally, impressive rally. It's one that we expected here, but now it's starting to get very long in the tooth, and risk is definitely to the downside here. Dow here via the diamond. Again, I don't know if this gets up to 345 after all. It's had a nice little pop here, but still not making higher highs with the spiders and the Qs. Believe it or not, this is actually not bearish that the Dow isn't making higher highs. The Dow is price cap weighted and it's blue chip stocks. So you don't need the Dow to lead in order for the market to be bullish. In fact, when the Dow leads, it's actually bearish. But for right now, it's hanging in there. It's holding up, but still struggling with this kind of pivot here, 343. If it gets through that, again, like I said, 345 is my target there. Russell 2000 here, a nice gap down. It looks like it's going to close. Yeah, it's going to close below yesterday's low here, unless they have a massive pump here in the last 20 minutes. But again, that 190 level there on the Russell has been a good level. We got through that kind of double-ish triple top here and right into that red bar again. Lots of bag holders in there. And Russell coming under pressure here. But again, for me right now, it's all about the spiders and it's all about this rising wedge pattern. That's really what I'm watching going into tomorrow and into Wednesday, obviously. Over to the semiconductor space. So semiconductors showed a little bit of weakness here earlier. So down 2% on the day. And didn't quite, it had that nice outside candle here around, say, 10:20, 10:30 here, and actually broke the low of the day. So that was kind of a leading indicator for tech to be under pressure, as well as the rest of the market there. So SMH, again, no real technical damage, right? You had kind of an outside candle up here. You tried to break out before you were ready, but ultimately no real technical damage here. It's still kind of inside of this green bar. If you take this low out, though, this thing goes a lot lower very quickly. First stop will be right around 215 there. You'll have maybe a little micro intraday pit stop at the gap fill, but the big level right here is this 215 level, and then the gap fill at 211, 212. IGV, again, confirmed above that 200 moving average. It's now basically back testing it on the downside. So again, no real technical damage right now. Could it have one more push up into this red bar? It's possible. We basically got there on Friday. But this is hanging in there okay. Again, this will behave with the same as the rest of tech. As far as downside here, you have a small gap right there. The bigger level is right around 260, 262 here for the IGV. All right, transports again. So I got to keep talking about this. Again, 1, 2, 3 lower highs. Now, technically, there's nothing. If just this chart at face value here, there's nothing wrong with it. You're above the major moving averages. It's acting well. It's consolidating sideways. You do have that technical damage though with that failed inside bar a few weeks ago, which suggests to us that the next rally is likely to be one that's going to get faded. But again, 1, 2, 3 lower highs versus the spiders. 1, 2, 3 higher highs. That is not bullish. So again, transports are talking to us and we're going to listen to them. But nice outside day there for the transports, down 2% and really led the market down here. Take a look at that intraday candle. So a pretty good sell on an intraday basis there for DJT. Kind of looks like the semis here, although probably even worse there. So again, keep the transports on your radar here. They are talking to us right now. Interest rates here. Let's look at the 10-year. Again, it's hanging in there. Okay, I still have, right now I actually have, not so much on the 10-year, but on the 30-year, still I have a pretty good buy signal on this, as long as it keeps above this green bar low here. So 129.14. If it can hold above that, this can go higher. So we'll be watching for that. Obviously, the FOMC is going to, dictate what this does. But the 30-year is holding up okay. The 10 and the 2-year are holding up a lot worse, though. So the 2-year here, you can see that green bar from the 18th that I just showed you on the 30-year, we're well below that. So the 2-year is underperforming, as is the 10-year to the long bond. So again, below that green bar. So the buy signal is really just on the long bond right now. And this is not good. So if the 2-year, let's say the bottom falls out of the 2-year and it can't get up to this target here, I mean, you could even make a case you got a trend line, starting to come into play right there on the 2-year here. But if this starts to break down, that's really bad. So it's going to put a lot of pressure on the Fed. So, but either way, it's hanging in there for now. So we'll just leave it at that. We'll see and reevaluate what it does after the FOMC. Home builders here, XHB and ITB actually holding up okay here. ITB actually down below yesterday's low. XHB is actually inside of Friday's range. So a little bit of outperformance here. Again, I think these are about cooked for the most part. VNQ going up into that 200 moving average. We got all the way up to 90.58 and then 90.68 on Friday. Again, these have very limited upside here, if you ask me, but they're hanging in there okay for now. Again, we'll reevaluate this. Like everything else, post FOMC, XLF actually down just 32 basis points. A lot of that, I think, is Goldman here today. Goldman having a nice rebound, up 1.35% currently. And it's backing off that 50 moving average here. If it gets through that, you've got, resistance at 366 and then all the way up to gap fill. I do not think it gets there. I think 370 is a tough level there for Goldman right now, but it is having a nice outside day and it is green in a down market. So we'll respect that for the time being. Broker dealers also, again, went up into that 490 pivot. They backed off. I wouldn't rule out one more little pop here. Again, if the market gets a bit off that trend line, like I suggested, then, this can hold up as well. But, yeah, again, upside is limited here pretty much across the board. Crude here. So let's take a look at crude starting to roll over. And, again, this is why I said, I don't like this inverse head and shoulders. We technically close below it anyway on a daily basis, but weekly, you still got that red bar. It's holding up. You do have higher lows. It's starting to make higher lows here, but that red bar has been king so far, and we've already taken out last week's low and the previous week's low in just today's trading on Monday. So crude showing a little bit of weakness here. We'll see what it does. The FOMC will probably move this, but this is starting to get in a much weaker technical position. It desperately needs to put in a higher low here. If it can put in one more higher low, then it has a really good chance of breaking this level. But again, it's got to happen on a weekly close. Otherwise, to me, it doesn't really matter. XLE actually showing a little bit of leadership to the downside today for once. So down 2% on the day, below Thursday's low and Friday's low, obviously. Just some backing and filling here. I do think these are really high on the hog right now, as you guys are aware. But they're holding up, so you got to respect them. XOP, same thing. I'm not really interested in any of these, any sort of trade right now. OIH holding up as well. I'd be interested in them more on buying a correction than anything else. But what can you say? OIH has just been a powerhouse here. That sell bar there though from a week or two ago was pretty good there, pretty good distribution. So, and again, you still have kind of a higher low potentially in play. So we'll see if this can take out the highs. I'm not so sure though. Anyways, nat gas, another low here today. Volume is starting to increase. Again, this is starting to get to capitulation levels. UNG here, we talked about that last Thursday. Huge volume there. Boyle has had ridiculous volume, although some of the Boyle volume here is because it's depreciated so much. So the same amount of capital, you need to purchase more shares to get the same amount of capital. But still very high nonetheless. I think nat gas is ridiculously skewed risk rewards to the upside at this point, and wickedly oversold here into lots of support. So I do maintain, I guess you saw a buy rating on nat gas. Dollar index again still trying to push in a bottom here, up 30 basis points. And notice how the dollar hasn't made new lows with the market. So something to just keep an eye, or as the spiders have made new highs, dollar hasn't made new lows. Also the VIX. The VIX never really made, it made a nominal low on Friday. It is up nicely here today, up 8.5%. Part of the reason why I think the market gets a bid tomorrow is because the VIX is up 9%, really, in a market that's not down that much. VIX. So just something to keep an eye on there. But again, dollar and VIX not really making new lows, with the spiders making new highs. So just something to kind of pay attention to there. Anyways, gold here. It's holding up okay. It's hanging in there. Could it make one more high? I wouldn't rule it out. I wouldn't rule out a blow off move here on the FOMC, but this is about done here. At these levels, it's very overbought. It's extended. There's no way I could ever chase it up here. It needs to correct. It needs to pull back before I get interested in any of these, any of the metals. Same thing for silver. Although the silver is consolidating, I will give it that. This weekly pattern isn't terrible. I just wish it wasn't. I just hate that it's like I've told you guys this before. It's almost like a rolling top, and I don't like that. If you had more of a right angle, instead of those kind of like higher highs than lower highs, and just kind of a straight right angle, I would like it a lot better. But it's hanging in there for now. So again, we'll see what this does post FOMC. Platinum backing off a little bit more. Again, got down almost to that 1,000 handle. Put in a little tail candle. This probably wants to go test 975 at this point, but it's holding up pretty well for now. Then copper here. I believe this has probably topped here. You'll have a little support at that 20 moving average, but when you get through that, it's going to go down to $4 and probably $3.95 pretty quickly. So just be aware if you're a long copper here. Then over to Bitcoin. So Bitcoin, nice outside reversal here. Again, they do this a lot, right? They pump it up on the weekends when there's nobody but retail buying it, and then they dump it on Monday. So pretty good outside move there for Bitcoin. Could this still get up to 25? Yeah, it's definitely possible. This pattern's not broken yet, but that's a pretty good outside reversal there on Bitcoin. It's an engulfing reversal too, but you're still above the moving averages. So we'll give it the benefit of the doubt. And again, the FOMC could give it a power bid. Definitely can't rule that out. But a nice reversal there on Bitcoin. Lastly, let's get over to the European markets. It is Monday, so we're going to do that. Euro 50 here. So that is holding up. We had a nice pullback last week, made a little bit of a lower high, but it's holding trend. These are very top heavy here. Take a look at the UK 100. Never quite got to that 7,900 handle like I thought. And you got a nice candle today with a tail off the 20 moving average. Could it make another bid up? Yes, but that's about it after that. When the spiders tops out, these will all be cooked as well. The DAX, same thing, down move. If you're in, a little bit of a pullback, red bar there. Still no real technical damage here, but these are all cooked when the spiders top. So just be aware of that. Again, could you make another nominal high here on the UK? I can't say no, but the upside is limited. So we'll just leave it at that there. All right. Last, let's get back over to the spiders here. So we got 9 minutes left in the day. Market's getting a little bit of a bid here. We basically, for all intents and purposes, kissed that trend line, that rising wedge trend line. So we'll see if we can get a bid off of that. If we break through it, we're probably going to go down to that 100 moving average around 397 there with that pivot high. So just be aware of that. I don't think that happens. I do think we hold up tomorrow. It would be a little strange if they just dumped this really hard tomorrow. But, anything can happen. So we always have to at least take those situations into account. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.